think back to your first job or think about the first job you're going to get. You may be a mom entering the workforce at the age of 40. You may be a college student. You may be a high school student who is about to get their first job at the local business in your area. But if you think to that moment when you're going to sign the paperwork, that's when the march to your W-2 at the end of the year starts. I'm going to go back and tell you about my first job experience at 17 and see if you don't feel the same way. I had just finished high school and I had borrowed money to get through my senior year of high school for tuition. Actually, my mother borrowed it from a coworker, and so I needed to go to work to pay that back. So I found a job at a pharmaceutical company, a pet pharmaceutical company in Los Angeles. And I went in and applied for the job and they hired me. I was hired as the inventory controller for a small pet pharmaceutical company, and it was looked like a great job. So they gave me paperwork to fill out. You would know it as a W-4, and it states, am I single? Am I married? Am I single with children? Am I single with no one? Am I married with just a spouse? Am I married with children? And it asks you for that because the government has a rather complicated formula to figure out how much tax will be deducted from your check. I really didn't understand that tax would be deducted from my check. I was hired at $300 per month, which meant that I would get 2 checks a month of $150 gross. Remember the term gross, because the difference between gross and net is where all those taxes are. So I filled that out, and I remember getting my first paycheck, and it was for $150 minus taxes. And I think my net check ended up being $119. And I went into the controller and said, I don't understand what is Social Security and Medicare and federal and state tax. Who decided how much would come out? So he sat and explained it to me that Social Security was X amount percent, Medicare was X amount percent, and those had to be paid. The federal and state, there is a really big formula and a book, a very thick book, on if you're single, zero, and you make X amount of money, and this is what you will pay in taxes. And so he went over all of it with me, which was really, really nice. And then I, said, okay, I guess what I have to do is just live not on 150 every paycheck, but on what the net is. I didn't quite understand, and then I got the gist of it, and I realized that the more money you make, actually, the more taxes you're going to pay. So I started working there just before the men landed on the moon in July of 1969. And I worked from July till Christmas. I actually worked there 2 years, but from July to Christmas. And then right after Christmas, in the new year, I received what was called a W-2. A W-2 is reported to the government about what you made in your paying job. Remember that if you're called an employee, you will get a W-2. Now, I don't know how many of you don't open your W-2s, but it's really important that, number one, you look at your pay stubs every time you get them, and at the end of the year, you check out your W-2. What your W-2 tells you is your gross wages, what your wages were before you got taxed, and then it will give you how much federal tax you paid, how much Social Security you paid, how much Medicare you paid in. And believe me, if you're like me, I've been paying into those systems since I was 17 years old. So there is no way those are entitlements for me. Those are literally things that I've paid into for, I'm 65 years old, so for a lot of years, 17 from 65, 48 years I've been paying into this. So I am entitled to those things, but those are not entitlements. So let's go to the W-2, and it says these are your gross wages. This is what you made before we took out the tax. And now they have a box for federal taxes. And then they have a box for Social Security wages and Medicare wages. And if you live in a state like I do, California, where you get state tax, it will also show you at the bottom how much state tax you paid, and if you paid into any disability programs, if you have a 401k or a retirement plan. Your W-2 is the thing that gives you the snapshot of your entire year. Now, normally you get a W-2 at the end in January after the year closes. But if you were to quit a job in the middle of the year, you would be allowed to ask for an interim W-2. So you would be able to look at your gross wages, what you've paid in, so that if you go to a new job, you might want to change those deductions. You might want to say, oh, I'm married, but I'm going to claim 3, or I'm single, but I'm going to claim 1 because I own a home. Or there are many scenarios, and we will be going over those scenarios in a later video. But so take your W-2, open it up, look at it, and say, okay, this is what I put into the system. So when you go to file your tax return, you'll take it, either you'll do it yourself on one of the there's lots of software to use, or you'll take it to a tax person and they will figure out your taxes, right? And you'll say, how do I owe money? I paid X amount in. Well, remember that complicated book I told you about that the federal government has? They might be calculating it differently than you. Now, if you go into your HR person when you have a paycheck and you say, you know what, I don't want to pay what the federal government says. I'd like to pay a flat amount federal and a flat amount state, because last year I got money back and I don't want to do that. I want to pay in just the amount I should so I don't owe any money and I don't get any money back. So that is the point of filling out your W-4 and getting your W-2, filing your taxes. The real point is you don't want to owe them anything at the end of the year, and they for sure do not want to give you anything back. So if you're using your paycheck and your withholding as a way to get some money, you know, maybe in March or April, that's really not a good use of your money. You should not give it to the governments to play with while you are maybe using a credit card. So we're going to talk about that as well. But on the W-2, you will see those things. And then you might say, why does my employer say that it costs him money to have me? All right, go to your W-2 and go to where it says Social Security and Medicare and see how much you paid in. Right now in 2017, it's 6.2% of your paycheck goes to Social Security and 1.45 goes to Medicare. That's 7.65% of your check automatically goes to those two places, unless you reach your limit. But let's talk about those of us who don't reach that limit. So see that 7.65%? Right there, those two amounts of money, your employer has to match those. That's the cost of him having you as an employee. So 7.65 of your paycheck goes to Social Security and Medicare, and 7.65 of your paycheck that he takes out of his money matches that and goes to the government as income. So yours supposedly goes to a Social Security trust, a trust where these amounts are kept sacred for the people that are going to collect, and Medicare premiums. That's what they're supposed to go to. But when the employer matches those two funds, they go to the federal government and the federal government, not the state, the federal government as income. It's flat out income to the federal government to get those two things. Goes right on their profit and loss under income. So you have to understand what you're paying so you know what you're going to get back. Social Security will give you a statement and say, well, if you retire at 70, you might get this amount. If you try to retire earlier, you would get this amount. And, you know, they've messed with the Social Security a lot over the course of time, from the time it was established with FDR to now. So you need to educate yourself, read up on how Social Security works. Go on Google, I'm telling you, Google it and say, how does my Social Security work that I give to the government? Where does it go? Now, I'll answer those questions for you later, but I would like for you to maybe do some homework and say, I need to understand Social Security and Medicare. I need to understand why it's being taken out, where it's going, is it safe? And I did not know that my employer had to match that. So when you talk about employers, and we all kind of say things about our bosses or our employers, or we work for a large corporation or a little tiny business, think about it if you're an auto mechanic doing an incredible job and your boss says, things are kind of tight and we may need to cut a person or two. Understand that when he's paying for his employees, he's paying that 7.65% as well. So if things are tight, if business is slow, he has that he has to give the government. There are huge penalties if an employer does not give that money to the government. I want you to understand how serious it is. There have been employers who were having a struggle with cash flow, and they paid their employees and they deducted the money from the employee, their Social Security and Medicare, but they didn't forward it to the government, nor did they forward their matching funds. Well, the penalties are huge. This is not a joke. So when you go to work for someone, you want to make sure that they're stable. You want to make sure that they're withholding and then forwarding that money to the government. When you receive your W-2, those funds are supposed to be with the government. If the employer does not send them, the federal, the state, the Social Security, and the Medicare, if he does not send them, you do not get penalized. You are fine. Your W-2, you can still use it. You can still get your taxes done. And if you're owed anything or you overpaid, you will get it back. But if your employer doesn't send it, it's all on your employer. Your employer is not allowed not to do that. So understanding your W-2, understanding that first piece of paper you fill out, the W-4, which states your name, your address, your Social Security number, and your dependents, your deductions, your filing status. It's called filing status. They're single, married, head of household. Those are things we'll go into even more in the future, but you need to understand that when you sit down, look at what you're signing, think about what you want to pay, think about your past tax returns. Did you withhold too much? Did you withhold too little? These are all things that an employee is responsible for, and I want to make sure that that is a step that you take and that you take full responsibility for and own that W-2. What goes on that W-2 reflects the choices you've made. It's not by chance. We don't let anybody else do that for us. We take the responsibility and create what that W-2 will look like at the end of the year.